Hello everybody, welcome to your weekend edition. It is Friday, the 15th of May. May Day, yeah, another bullish session out there for those of you who are long on these markets. Not the way I thought this market would finish, especially in the face of such tremendous economic data. We'll go over that here in just a minute. For those of you who might be new to the show, I would encourage you to click that subscribe button down in the bottom right-hand corner of your screen. That way you can be updated with all the live show announcements as we do live every day, and then also on the weekends. I think Saturday, tomorrow morning at 10 a.m. I will be releasing another video, but that won't be live. That'll be pre-recorded for you guys to check out and enjoy the content of that one. So subscribe, hit the like button if you enjoy anything part of the show. Of course, you can always send us questions at TraderMerlin.com, which I had up there earlier. You guys just send your questions there anytime or in the chat we have below. All right, let me get going with the day. I'm going to do a lot of listener questions here, but also go through our markets. I have some very interesting charts to look at. As I mentioned, some of the economic data today was, to me, the more compelling piece. I actually have had this fairly sizable short position, really thinking that we would miss badly on retail sales numbers today, and we did. We actually had a really ugly miss on retail sales. I'm going to start right there and show you the retail sales numbers data. Let's begin with that one. Here is the, let's actually go back up a screen so we can see what happened for the rest of the world. This is the rest of the world's economic announcements for today. And I put a little red box around this because, as you can see, everything with regards to Europe was totally in line with expectations. They didn't miss a beat. I mean, talk about good forecasting. Oh, okay, their flash employment change was off a little bit, but nothing major. And then you look at the U.S. today. Now, obviously, we had a lot of announcements, but there's a couple that are pretty important here. This is all that came out today, and I just kind of marvel at the inaccuracies or inability to forecast correctly. This is all of the number you're seeing in that red box, two numbers. The left-hand side is the actual number, and the one on the right-hand side of the red box represents the expected number, the anticipated. The number on the far right side of your screen, not in the red box, that was what we achieved the previous reading, whether it's a monthly, weekly, or quarterly number. That was the previous number. So of note here, of extreme note, would be the retail sales numbers. We've been talking a lot, or at least I've been talking a lot about how I feel that the retail sales numbers is obviously the driver of our economy. And if we start to see a slip significantly there, that will be a cyclical kind of unemployment piece, meaning retail sales numbers drop, that's less consumption. Numbers continue to drop, that means layoffs. Layoffs happen, that means more unemployment, which means more lack of jobs, and all of a sudden we start this vicious recessionary or depressionary type of cycle. So that was the numbers I was looking at today. Shockingly bad numbers. I mentioned on yesterday's program, I actually thought that we would exceed the expected, which was negative 12%. Let that sink in a second. Negative 12%. That's a massive slide. A trivia question for anybody out there. When is the last time we saw retail sales numbers drop by 12% month over month? Any guesses? I'll let you guys wait a second. Type those in chat here. They were expecting it to go from negative 8.3, which was a huge negative number, to negative 12. We came out at negative 16.4. You're wondering what that top number might mean. When you strip out automobiles, generally those are the more volatile instrument within retail sales. Normally when you strip that out, you get a little bit better number. It actually gets worse. You strip out the cars, we're at negative 17.2%. This is a very, very ugly situation with regards to consumption in the United States. Yet what was amazing for me anyway was how the markets simply shrugged it off. Let me show you a historic chart here since I asked you guys, and I switched it back to a normal latency because I think some of you were talking about having a blurry screen on the video. I think that that's a result of me switching to low latency, which is going to get your response times get a little bit shorter so I can see them faster. But it says it may come at the cost of some buffering issues on your end. So I removed that back to normal latency, which means it's going to be a bit longer for me to see your answers. Hello, Jorge, and others out there. So we got a pretty full group out there. I didn't give anybody a shout out. Terry, we've got Brendan, we've got Renzi joining us today. Renzi, good to have you, my friend. Brendan as well, Big Ab, Oliver, good to have you there, my friend. Let me show you this chart because it's a compelling chart to look at just to see where we stand in perspective. I asked you guys, when was the last time did we see an unemployment drop 12% in a month over month? The answer is never. We've never seen that before. So I wanted to bring up this chart, which I thought might be interesting. Here is the retail sales numbers just going back into 2008, from 2008 through till today, which is a period of 12 years. And you notice that even during the Great Recession that we had in 2009, I'll put a little horizontal line there, we only got down to like negative 3.8, 3.7% with regards to a monthly decline in retail sales numbers. So clearly the the March number was shocking at 8.5, but now we're at 16.4, which we've never seen before. This is pretty significant, ugly numbers being posted on retail sales. That said, let's jump to our markets today and take a peek at what happened out there, because you want to talk about the definition of resilience. Well, we'll start with something that wasn't that resilient today. Here's Bitcoin, which actually has a huge bearish engulfing formation. This giant red candle here on Bitcoin today. It's still at 9,295, so all in all, it's pretty good. But it was your worst performer, down 4.2%. Now from there, we move to the one that I am still presently short on, which is the S&P 500. And you notice the end of day candle, which you guys can see on the screen here, really isn't that noteworthy. There's nothing special about the candle here. What is noteworthy is kind of what happened intraday. This market should have looked at this and said, holy cow, negative 16% retail sales. Clearly this is going to transpire into much more economic data that's going to get much, much worse. I believe what happened here today is the market is now believing that even though we've got this, I will say it, an apocalyptic retail sales number, because we've never seen anything like that. Even in the Great Recession, when everyone was saying this is one of the worst markets we've ever seen, it only dropped to negative 3.7 or 3.8. And here we are at 16, 17 if you take out the automobiles. So I believe that this is the market saying, you know what? Someone's going to bail us out. This is such bad news that the Fed's going to pump more money in. And that may be a true belief system out there. We may actually see the Fed react to this next week or have an emergency meeting and say, hey, we need to step it up here a little bit. But bottom line is, unless they force you to go buy stuff, retail sales numbers are going to continue to suffer. So let me walk through some of these charts here. We'll go through the top 7. I'll go to the breakdown of what happened within retail sales. And by the way, I didn't do this yet. Cheers to everybody out there. Happy Friday. A nice frosty cold beverage for you. If you don't drink, that's fine. Have yourself a nice glass of water. But cheers to a great trading week. I hope you all had some fun and some green in your pockets out there, and hopefully some entertainment on this show as well, and you learned something along the way. So cheers everybody. Happy Friday. Glad you're joining me today. Oh, that's delicious. And for those who like to know, today I went with one of my personal favorites. High West is one that I really like. The whole series. I like the whole nostalgic looking bottle. So I'm going to the High West American Prairie Bourbon today. All right, that said, at some point maybe I can get some sponsors for, that would be great if I could get some sponsors, a whiskey sponsor for the show. Anybody got any connections there? All right, let's move on to our charts. S&P 500 was up 0.27. Let me show you what it looks like on a 5-minute basis, because that's where the tire meets the road. Look at the move. I mean, you had the announcement this morning, which really started off on a negative note, right? The market was really not looking so good, and then all of a sudden just powered through it and shrugged off all of that bad news that we saw on the economic calendar I showed you earlier. I was pretty shocked myself, although, you know, it's no surprise. You know that the Fed's probably going to step it up here, and then at some point, the house of cards is going to fall apart when the Fed can't continue to do this, but we'll have to wait and see when that exactly is. I'm hoping it's by September. All right, NASDAQ 100 was double the goods of S&P 500, 0.42% gain. Again, technically, there really isn't much to speak of from a candle perspective. You've got 3 days in a row where you kind of have these long bottoming tails, which of course is a nice positive sign for upward side movement. Gold was up to $17.54, a nice move on gold. I'm really liking the way this is moving. We talked about this being a descending triangle. Yesterday it broke above that downward trend line, which is great. We had follow through today, so clearly we've got some momentum moving to the upside here on gold. Again, 0.76% gain up to 1,754. Now, the one that I was focusing on yesterday, you guys might remember, you can type it in the chat if you want, but yesterday when I started off the show, I said there's a specific of our top 7 we start with that I said it's got a great candlestick pattern. It looks really bullish to the upside. There's probably going to be some follow through to the upside tomorrow, and you know, we could attribute that to just about anything that we want. But if you follow the rules that I've talked about on Power Trading Radio many times in the past, you would have had a pretty nice day trading which index? That'd be the Russell 2000. Why? Well, look at yesterday's candle on the RTY futures contract here. You have this Dragonfly Doji. Now, the rules are rather simple. You would not have caught this whole move. So I know many of you right now are thinking, well, how would we trade this? How would we trade that RTY Dragonfly Doji here? Well, my rule is this, and again, everybody has to have their own rules. You all need to have your specific strategies. I had about a dozen questions come in the last 24 hours about what's my trade on this, what's my trade on that, and how much am I risking here, and how much am I risking there, and what should I risk? It's like, bottom line is that each person has their own individual makeup of risk, and mine is probably going to be a little bit more accepting of risk than most people. So sometimes I'm apprehensive to show these things because I don't want you all to start taking my trades, and there's some times where I take some pretty significant losses as well, and I'm okay with that because in the long term it all washes out to me. Anyway, rules for this one are simple. If you look at this Dragonfly Doji here, basically what I just did is I put a line across those highs, okay? And I'm going to zoom out here so you guys can just see the candle, and we'll pretend that nothing. Oh, come on, Merlin. Let's not have this happen right now. Okay, and we got rid of it. Okay, so there's yesterday. Totally forgetting about today. My rule is that it has to open up somewhere down below this cyan blue line, which would have been at 1240.60 on the Russell 2000. If it opened up somewhere down below that, great. That's what I want. I want it to rally. I want it to start from below and then have momentum and push back up, because it's the momentum to the upside that I established yesterday, which was so compelling. Now, of course, you can see that when we opened up today, we were in fact lower, and we did sell off a little bit before rallying. So the question becomes, how did that trade look on an intraday basis? So I'll bring up a 5-minute chart. Hopefully it keeps that line on my screen. And you guys can see that we did in fact open down below that line, right? We opened up down here, rallied up above it, tiptoed around it a little bit, and then just started to rally up. It wasn't the greatest move in the world, but it was one where it was an easy identifier of a potential trade setup. And a lot of people ask me, well, how do you pick what you trade and how do you make your trades? A lot of times it's just this right here. I'm looking at a formation. I say, okay, tomorrow, if this set of circumstances happen, then I'll start to map out a trade for it. And today would have been a nice one on that Russell 2000. Granted, the news would have been challenging to go long today simply because the news was so ugly. But the market just shrugged it off, right? You got to go with what the market gives you. All right, that was your number 2 finisher. Number 1, back to crude oil. Boy, it's just been on a monster tear. This is where I look back and just go, gosh, I wish I would have held some of that stuff. I had such huge gains on some of these crude oil trades that I was just completely content with it. And now, of course, you look in hindsight and go, gosh, I dumped oil when it's at $20 and it's now at 30. 29.78 is where crude oil is at right now, up 6.81% on the day. Very nice gains. This is the 5-minute chart. I'll show you the daily so you can see the breakout. We are going to smack our head against this $30 level. That's where we're at right now. My guess is that next week you'll probably see it creep up towards that 35 mark. We'll probably slow down right around 34.50 before turning, but all in all, momentum is great right now. Well overdone sale. And then if you look at the inventory data has been the piece I think that's the catalyst of the upside here, because inventories are starting to decline significantly on the crude oil front. And that is your top 7 markets out there, everybody. Hopefully some of that puts some green in your pocket. Now, let me see if I got any questions. Tom Barr said, during the Great Recession, we did not have retail pseudo-martial law. That's true. We didn't. So we never, and that's the unknown here, right? That to me is, Tom, that's the big unknown is, I don't know how long it will take to right the ship from being down negative 16% on retail sales. We know that some businesses are opening now, but you're also hearing companies saying, hey, or not companies, counties or cities or even states saying, we're going to keep that shelter in place going longer. I'm hearing July for some states. It's like, ooh, goodness, that's a long time away. That could certainly have a much bigger impact than we're seeing right now. Bottom line is there's going to be a ripple effect from that. And is the amount of money that the government and the Fed has put in enough to backstop it and prevent it from sliding? I don't know. I personally, I don't think so. But I have a couple friends who believe that we are going to be rocking to the upside here from here on out. For those of you in detox, that's good. It's a good thing to do. I don't want to give the impression that I'm an alcoholic, but I just like to have a nice cold cocktail or frosty glass of whiskey on a Friday as an exclamation point for the weekend. Our trading week is done. Good. All right, let's go to some listener questions. Again, I'm going to do a bunch of listener questions today, so if you have some, feel free to send those on in. I'll do my best to get to as many of them as I can today. Some of these were interesting metrics and interesting questions. I'll start with this one here from Mark F. Sent this one in, I believe, yesterday or today. He said, sometimes using ADD, the tick, or the trend can help determine market direction. Problem is they're only available during U.S. market hours. What are the equivalent Asian or European ticker symbols for those that like to trade the night owls? I probably shouldn't have even brought this question up here because I don't have an answer. I don't know what those indicators are for Asian or European markets. I'm sure that they're there. Now, you got to understand what those things are telling you. So you have like the tick or the trend. This is telling you how many stocks are on upticks versus downticks, which for most people, they don't even understand what that means. If something's on an uptick, the last transaction happened at the bid price, meaning the price dropped. It's a sign that things might be slowing down. I only really found that to be beneficial from a short-term intraday perspective because there's so many transactions happening because of the algos that buying and selling is happening all the time. So it's not a clear indication anymore. It used to be that if I saw, let's say out of 1,000 stocks, 900 of them were on downticks, market's going down. I mean, that means right now everybody's unloading on the bid side. But I don't find it to be that useful from the longer-term investment perspective, not really that critical. The other one here would be, advanced decliners, that type of metric. Why is that important? If you're looking for, especially on a swing or intraday trade, for momentum and market direction, let's say we have a market like today where, let's say the market was up 1%. If the market's up 1% and 75% of the stocks are declining, that means that 25% of those stocks are carrying the whole thing up, which could be a recipe for disaster. So for me, it's just saying, where does that strength lie? Which of our market or the components of advanced decliners are going to be moving that market to the upside or the downside? So as far as tick, trend, advanced decliners, I don't have any numbers for you for Asian European markets, and I'm also kind of iffy on whether you should even use those in general. To me, they're really like items on your dashboard, right, in your car. There's so many things in your dashboard that you just don't use. They're nice to have there every now and again, but they should certainly be more of a support decision piece than they are anything else in trading or investing. All right. So, Mark, I apologize. I know I didn't give you the answer that you wanted there because I don't know about anything for the international markets. I don't really trade the international markets anymore. When I lived in Italy, I did, but not anymore. All right, next one. Would you mind guiding me through this rather unnerving market for crypto? Now, this is for Alexandra. This was a part of a much bigger question, and I can't guide you through it. What I can do is I can direct you to a class that I built a while back, and that is basically for Online Trading Academy. You can find it at otacademy.com. You might have to sign in and register with your email or anything. You can register there. It's just, they'll just send you emails and stuff. It's nothing else. There's no fee associated with it yet that I know of. There might be down the road. But I built I believe it's 17 module course on cryptocurrencies. It's not designed to make you a believer in cryptocurrency. It's not making you want to go out and buy it. It's just showing you, here's what it is, here's how it works, here's what it's good for, here's some of the flaws, here are some of the main things you need to consider. Because for many people, like Alexandra, they're looking at it going, I don't get it, it doesn't make sense, I'm scared of it. Well, if you don't know about something, you should be scared of it until you learn about it and remove those fears. That's the easiest way for us to remove fear in anything in life, is to understand what is causing that anxiety or fear. I'm going to, I have a note. Oh, you don't think it's up? It might not be. With all the FTC things, it might not be. Let me see. Let me put a note right here. I'll write this down because I built it, and they never did anything with it. So I'm going to see if I can get it and put it on my YouTube channel. That might be a benefit. So keep your eye out. Maybe, yeah. Okay, so it is good. All right, Brendan, thank you. Well, I'm still going to see if I can move it over to my channel because I think I could do it more justice and get a little more visibility. But it's broken into really distinct modules so you understand the value of money, what it is, how it functions, decentralized networks. But most importantly, for Alexandra saying, I want to get into it, meaning go and buy some, you really should know what you're doing before you go out and buy it. There are some significant risks to you, especially when you look at things like private keys and storing of them. When we go and we buy a stock, it's simple. You open up your E-Trade account or Ameritrade account, you hit buy, and okay, the stock's there. Is it? You don't really know, but you trust that that is the case, that it's sitting there at that firm. Cryptocurrencies, depending on how you buy them or how you store them, that security and knowing where it's going to be is totally on you, as opposed to trusting that institution to have it for you. So it could be a bit of a scary thing. I would encourage you to research before you get into any of it. And I'll do my best to see if I can get that whole course put onto my page, since they're not really using it. And you know what? If you want to learn more, you can go to otacademy.com. I did a whole bunch of crypto stuff for them, which I thought actually came out pretty good at the time, and it's still, I would say it's rather timeless. There's certainly some changes that have happened in the past few years that have, a couple years since I built it, that have changed the dynamics, but it's still a very good course out there. So, all right, I saw a question come in. Where was that one? A question: how much can the Fed prop this thing up? We should be closer to SPY 200 than 300. Something has to give. COVID notwithstanding, there are several other downside risks. There are, and this is one of those things that it's a market mantra for a reason. I talked about that on a show earlier this week where I talked about sell in May and go away. There's another one out there which is probably the most relevant one that we should all heed, which is the market can remain irrational longer than you can remain solvent. Sad but true. And while we can all look at this market right now, not all, I know there's some of you who are very, very bullish on the markets, and that's totally fine. But I think many of us would look at it and say, this is a house of cards. It's completely propped up. Yeah, I believe the numbers, the facts and figures that we talked about with Bill Addis yesterday, talking about how much the Fed is pumping in and propping up, you can see on the chart. We're talking trillions of dollars to help support this market from doing what it should do, which is go down. But at what point does this impact of capital infusions from the Fed and our government no longer have the effect that it should? And that's what's propping it up right now. If you were to look at the simple facts and figures, the amount of money that they have put in versus the amount of GDP lost, we would actually be going up from here. We would be going higher. But I think that that's just it's hard to explain. I think that that's a short-term data point. What I mean by that is, when I talked about the Fed pumping in money and the government pumping in money and talking about all-time highs, that was $5 trillion. Now we're hearing about 3 more coming in from our government. So that would be, 8 overall? Remember, the annual GDP will round it up to $22 trillion. So if all of a sudden, the Fed pumps in $8 trillion, or the government and Fed combined pump in $8 trillion, you're looking at almost, 40% of our annual GDP has just been pumped in within 2 months. So they're offsetting that. The problem I have is I believe that loss of activity in our market is not it's just going to turn it off and it's back to normal. There's a trickle effect. So how long will our government and the Fed continue to put money in? That's the $50 trillion question. And Brendan, I agree 100%. Something's got to give, which is why I have such a sizable position. I didn't add anything to the position today. I'm in just about as big as I want compared to my rules. I have a $75,000 limit on the put option trade here, and I'm getting awfully close to that, so I want to get any bigger. So there you go. That's my answer to that one, Brendan. Something has to give at some point, which is why I bought the September's, because I do think that second quarter earnings are going to be those ones that make people go, ooh, wow. I mean, we're seeing retail sales numbers at negative 15%. It's gone from positive number to negative 8 to negative 16. If this keeps up, we might be at negative 20 or even more. That will have a residual effect going forward, and that's dangerous. Anyway, that was a long-winded dovetail there. Alexander, you want to know more about cryptos? Go to otacademy.com. I'm going to actually see if I can. I hate typing while I'm doing this show because sometimes I mess up on some things. Well, it says it's not working right now. There it is. Yeah, it's up. I think I'm actually logged in, so I can see if I can log in here. Hopefully, I have my. No, I don't have my login in front of me. But if you just go to otacademy.com, I'll show you right here as I share the screen with you guys. There's their website. If you go to library, you'll see there's a whole session here on cryptocurrencies, and you go to that, and you've got all of these are going to be locked. But these are some of the videos: history of money, blockchain technology, making transactions. You get down here near the bottom on the second page, and it's how do you buy it? How do you actively trade them? How do you invest in those? What are forks? A lot of great content here. 15 videos is what they have up right now. But you can find that at otacademy.com. Share that with anybody that you know who might be interested in cryptos. If not, I'm probably going to see if I can get that to migrate over to my YouTube channel. Since I built all the damn stuff, I should be able to at least promote it a little bit, give myself a little glory. Okay, there you go. That was the second question from Alexandra. Let's go to our next one, which was, let's see, this was, yes. What are your opinion of inverse ETFs as another way of shorting, SPXU or SQQQ? All right. I have strong opinions about this one. I think that if you are a long-term investor and you're looking at SPXU or SQQQ, it's a bit of a danger because these are they're designed to be shorter term trading instruments, right? They're really made to be day trading or swing over a day or two. The longer you hold them, the more you're going to have a decay factor in the rate of return as especially the more fluctuations you get. If you have real strong convictions that you feel these markets are going to tank and they're going to tank in a specific window of time, I'm okay with it, but you got to be careful. I mean, those ones that you mentioned, SPXU and SQQQ, are triple. So you have the risk of losing 3 times as fast. And the problem is we have this belief that I'm going to make money 3 times as fast. Yes, that's true. But you can lose money 3 times as fast. And most people lose money or fail in the financial markets because they don't have a risk management or stop loss plan. So if all of a sudden one of these things starts ripping against you, let's say, for example, you thought these markets are going to crash, and all of a sudden that $8 trillion that the government and Fed pump in pushes to all-time highs in a week or two, you might be broke. You might be financially insolvent. So, I'd be very careful with that one. I believe the name is IVZ B. And I'll show you SPXU on a chart here with regards to price performance. Here is, let's put on S&P 500, and I'm going to try to do this. Let me copy this window and do it so I don't mess this one up, because a lot of times when you do these price overlay charts, it screws things up a bit on TradeStation. So here is the S&P 500. I'll put SPY in there as we get the ETF, and I'm going to add in, let's go insert symbol, and we'll go put in SPXU. I'm also going to I'll put in a couple different ones. I'll put in SH, which is another version of this. And I'll put that up here, and I'll say no axis. Okay. And then I'm going to go, and I'll add an SH as well. Let's go insert symbol. And that just so you guys can see the different ones, because SH is another way you can play this, but it's 1-to-1. So you could just buy that. So if you are on a retirement account and you can't go short SPY, you could just go SH. And let's go to no axis, and I'll make it a price percentage chart, because right now you guys are looking at this going, what in the hell is he doing? Okay, and so there we go. This is a price percentage chart, and I will do that from, let's just do it from the beginning of the year, just so we can see these wild swings that have gone on here in the S&P 500. We'll do it from this bar. All right, so here you have those 3 things in relationship to each other. Let me remove this, disable ATR. Hopefully you guys can see that. Is it kind of hard? If it's hard to see, let me know. I can change the thickness of these fonts and colors, because I sure as heck can't really see these colors and fonts. I believe that this SPXU, which is the triple short, that's this one up top here. You can see huge extension. I mean, you would have been up over 100% on SPX if you started January 1st, over 100%, 112 at its peak, going back to the 23rd of March. Of course, right now, you're down 18%, which is interesting because the S&P 500 is down. It's down 11.8%. And you're wondering, well, hold on. If the S&P 500 is, let me highlight these just so we can see that the triple and the market itself. I'm going to make them much bolder so you guys can see a little clearer. And I'm going to change these colors because they're hurting my eyes. How about white? There you go. SPXU is in white. That's that triple short the market. And then I will also, in green, I believe that is, have the S&P 500. Okay, so the point I'm trying to make here is the longer you hold these, the more dangerous it becomes. And why do I say that? Because right now, the S&P 500 for the year, SPY, is down 11.8%. We'll call it 12% to be just nice, even numbers. So let me riddle me this, everybody. You guys get to participate here in the math lesson for the day on TraderMerlin. If the S&P 500 is negative 12%, it's down 12% on the year, then if you held something that was triple the inverse of that, what should your position be? What should your account balance be? If you're down 12% on SPY and you bought the triple negative ETF for that, what should your position be? It should be simple math, right? You should look at this and go, okay, I've got negative 12. Therefore, if I triple that, that'd be negative 36. And plus, this is the inverse of it, so it's going to be positive 36, right? I'm hoping I see some plus 36 numbers scroll through here in our chart. I'm hoping so, as I take a nice sip of this frosty American Prairie High West bourbon. So, all right, I'm not getting the participation, or maybe my lag time is too high here. Shouldn't that be right? If it's negative 12 for the SPY and SPXU is triple that, negative, it should be positive 36% rate of return for the year. This is why holding those things are so dangerous. SPXU is actually down 19%. So even though you picked something that was right, okay, market's going to be down this year. Okay, great, market's going to be down. I'm going to buy the inverse ETF and hold it. You'd be doing worse than the market by holding SPXU. Do everybody see that? Does that make sense, everybody? I know. It does make, it might make your brain hurt. I apologize for that. And I wish I had a way to draw. I actually just bought a drawing board so I can maybe draw things a little bit more effectively. But it's pretty simple. You know, the SPXU, and I'll bring this one back up here, and I'm going to draw on this. There you go. So let's do the pen here. SPXU, what is this? It equals, it's the 3 times the opposite of SPY. Right? That's what SPXU is. You could put a negative sign. It's the opposite of it. So if SPY is negative 12, 3 times that, and then you do the opposite, is 36 plus. So based off that simple math, SPXU should be up 36% right now. It's not. It's actually down almost 19%. The reason for that is because of time and the way that price movements go. When something goes up 10% and then drops 10%, it's not back to even. And that takes a big toll. I know. Sorry, guys. I just yes, Brendan says ETFs are not they're for trading, not for holding, and that this could not make that point clearer. Right? You notice here SH, this cyan blue line, which I'm going to make much bigger. I'll make it super huge to really be annoying on the screen. That cyan line, that's SH, which is supposed to be just the inverse of S&P 500. So if SPY was down 1%, SH should be up 1%. Simple one-to-one relationship, but the opposite. And you'll notice that it isn't up 11%. It's only up 3%. That's because of time. Time decays these things, and you just got to be careful with those. So to go back to the initial question that came in from Ivzy B, I would say my opinion of them is great from a short-term perspective if you want to be more of a trader. If you don't, I would say leave those things alone. They are not good for you on a long-term basis. They can actually erode your profits fairly quickly. You notice here in just a few months, a significant rundown. I know I should have gotten a touchscreen. Oliver, I saw that touchscreen. Yeah, I know. I could. It's just one more thing. I actually have a drawing tablet, which I'm trying to hook up. Oh, all right. So, Ivzy, and if you guys have questions, feel free to send them on in. Again, I'm going to do this kind of more open here today. Here's a bonus math question. How long is the entire cryptocurrency sector? Oh, Brendan. You mean as far as market cap? Oh, I don't know. No clue. I haven't even looked at it in a while. Brett, Oliver, I'm not drinking that much, buddy. I've had one. This is my only glass I've had today. I'll have some later on. I have trivia tonight, so. Okay, it's interesting that the market cap, you said 260 billion. Remember when it was like 850? It was like 850 or 860 was the high on it. It was pretty crazy. All right, I'm going to keep going. A couple more lists of questions here, and then I'll open up to you guys. And this is certainly going to probably get some help from the audience out here. My gold and silver that I buy, actually I don't buy really silver. I'm really more of a gold guy. The gold that I buy, the gold coins, there's a coin shop down the street here that I use. I like to go in and see the guy face to face when I'm buying it here in Southern California. So if you're SoCal, I could probably give you a recommendation. Other than that, you kind of have to find different companies. I interviewed a representative from a company called Rare Coin Wholesalers, RCW. I believe it's RCW Group is their website. And I've actually met Paul Busby, one of the representatives at a trade show. And most people in the gold industry are like realtors. I apologize to anyone out there. Realtors are generally always bullish on the market. Coin dealers, always bullish on the coin market. So I went to a couple different presentations, as I do, because I was presenting at these trade shows, so I like to go see what other people are talking about. And Paul Busby was out there on stage going, "We think gold's going down." And I was like, "Whoa, wait a minute. You're a gold coin, you're a rare coin company. Why would you be telling people we're going to go down?" He goes, "Because that's what we think is going to happen." And it was great because actually gold did start to drop, but he had all these reasons why, and I just felt like it was more honest. It was a straight shooter, and I've done some work with their company for a while. So Rare Coin Wholesalers might be where I would go to buy gold coins or precious coins. Other than that, you got to shop around. I know Brendan is a big gold fan. He could probably point you some places that he uses to buy, maybe not physical gold, but you can buy tokenized gold online, etc. Other than that, you really got to do your homework, due diligence, search around. And, when I went to gold dealers, basically what I was trying to do was I was buying all the gold coins for a gold coin contest that we were doing on Power Trading Radio, which I'm thinking of potentially starting up here as well. And I went to a few different places just to negotiate and see what the prices were. I'll tell you that the spread between what you can buy it and sell it at in many places is dramatic. You're not going to get the same numbers everywhere you go. So shop around, see who's going to give you the best prices on those specific gold coins. Yeah, Brendan says Sprott Money or Kitco. Kitco is kind of the Microsoft of the industry, if you will. I mean, they're the big dog. They've been around forever. Sprott is pretty darn big as well. All right, there's that one. Let's see. Okay, this is an odd one. Not an odd one, but a question that I get frequently with regards to trading. It says, what is the percentage that the Fed and state governments are looking to collect on withdrawals from gains? It's not that they're looking to get anything in particular. It's all what that trade is capitalized or classified as. And what do I mean by that? Well, obviously you have long-term capital gains and you have short-term capital gains. Short-term capital gains are taxed as ordinary income. So if you're in a high tax bracket and short-term capital gains, they could be taking a big chunk of your earnings. If it's a long-term capital gains, obviously it's capped. I think they bumped it to 20. That's the percentage. So it's not they're looking to get. It's just what the IRS and the tax code tells them that they can get. Within that, I think it's important that you understand there's different asset classes out there that will give you maybe preferential tax treatment, which is one of the reasons that people love futures contracts, is because you have a 60-40 preferential tax treatment where part of it's taxed as long-term capital gains and part of it's taxed as short-term capital gains. So different instruments can give you a better bang for your buck with regards to taxes. But to answer your question, Jonathan, they're not looking to take a specific percentage. They're just saying, here's what you made money on this. How long did you hold it? If you held it over a certain period of time, it's long-term capital gains, and therefore it'll be smaller taxes. If you're more active, they want you holding these markets. If you're active, they're going to want to charge you as ordinary income out there, and that may impact significantly. Now, this begs the question, many of you might fall in that category of trading under a corporation and having the benefits of a corporation, which can be huge with regards to write-offs, deductions, the list goes on and on and on. I built some great videos, which I think you can actually find those at otacademy.com too, with regards to trader taxation and some of the I'm not going to say loopholes, because it almost sounds like you're taking advantage of something that you shouldn't. There are things in the tax code which there's rules there that you can use, and it sometimes it looks like you're exploiting something or doing something wrong, but it's in the tax code that you can do it, such as writing off concert tickets or meals or travel. If I wanted to in a corporation, I could fly to Hawaii. I could take a one-day trading class and spend a few days there in Hawaii, all under the guise of, hey, you know what, I'm taking these trading classes. And of course, there's some shady areas there, but done right, you can write off a lot of those expenses and travel expenses. If you have a corporation, you could put your family members on that corporation as well and pay them salary. So all your little children who are running around saying, give me an allowance, you could actually say, you have a job now. Want to get a paycheck? Now you got to work. Anyway, we could go on and on about the trader taxation point. Maybe down the road, I'll actually have a show special on trader taxation, because I know some of you have been asking about that. It's not my area of expertise by any means. I am not a trader tax expert. I know the certain things that I need to do to optimize my tax return, etc. Let's see. Daniel, welcome, my friend. Well, you missed, or we're getting a little bit late. Dave is mistaken here, Daniel. I am not drunk. I am not, absolutely not. I've had 3 sips of this glass of whiskey. Honestly, I wish that would be the case. With 3 sips of whiskey, no, sadly no. No, I was actually showing them the numbers between inverse ETFs, a triple leverage ETF, and the underlier, and how they don't work. The math just doesn't make sense sometimes. Okay, great question from Brendan. He says, Merlin, some people think we won't retest the March lows. I think we will. Thoughts? That's, it's a belief system. It's a belief. You believe it. I believe it as well. There's those out there that believe that all the capital being put in and our government and everything won't let that happen. And they have a good argument there. Bottom line is this. I believe, through my analysis and my thoughts and my understanding of the markets and the way things have been happening, that that first bump that we've seen in the last month, that nice huge rally everyone's saying was the bottom, and now we're going all-time highs. I've seen this before. It happened in 2000. It happened in 2008, where we sold off aggressively and make people's butt pucker, go, oh my God, we're going to die. And all of a sudden, it started to bounce back up. I'm like, oh, yes. Woo! Good, it's short-lived. We're safe now. We're out of the woods. And it got people, lulled them in. Some people call it the bull trap, where it lulled them into the market, and all of a sudden, the bottom just dropped out of it, and the market did what it had to do, which was go much lower. That's what we saw. The best example of that was 2008 going into 2009. But we have a different situation now. The pattern looks the same. We've had the aggressive, sharp decline. We've had this nice bounce up. Now the question is if and when that turn happens and we start to go back towards those March lows. I think we will, and I think we'll actually go below those, and that's why I have the 185 puts right now. It's a shot in the dark. I mean, it's definitely one of those ones I'm going against economics. I'm going against the Fed. I'm going against the government, which is a very stupid and dangerous thing to do sometimes. But I've got strong conviction. I earmarked 75 grand for it as my risk factor. So I've got 75K in it. If I lose 75K, it's not going to be the end of the world, but it's one of those things with that kind of investment, I'm going to be looking to pull out probably 200, would be maybe 3. If we get a fast enough slide, who knows? It could be a $500,000 trade. But that's obviously huge risk that I'm taking there, but it's risk that I'm comfortable with, and that money is earmarked for that specifically. So there are people who think we will not retest those lows, and that's their plan. So what are they doing? They're buying right now, and good, as they should, because the market has been trending rather strong for about a month. But I just don't think it's going to hold up, and that's just my belief system. If I'm wrong, then I'll lose some money. If I'm right, I'll do very well. That's the art of trading, isn't it? I'm sure many people in this room have difference of opinions, as the different opinions to what I say on the show sometimes, and I think that's the way it should be. That's why markets work the way they do. Is someone thinks it's going to go up, someone thinks it's going to go down. Ultimately, someone will be right. Ideally, both people will be right, just a matter of time before it all pans out. Yep, Mick's right. It says, never fight the Fed. Yes, you're absolutely right. And fighting the Fed right now is a very, very, I'll say, dangerous thing to do, but just history has told me that we're not done. The market is reacting right now as if this whole thing has been resolved. That it's all done. Oh, great, we're right back to normal. Let's just keep going to the upside. Oh, no. We're not done. The economic data. And I think there was a comment earlier about Q2. Let me really quickly... well, there was a question. Oh, boy, you guys, you have so many comments in chat here. I don't know where it was. There was a comment about... Oh, let me see if I can find... I'm trying to think and look at this at the same time. It's not working. Never mind. I won't try to look for it anymore. Anyway, that's it. Why did you go put out of the money puts on SP instead of in the money? Because that's a good question. If I went in the money puts, first off, they're really expensive. At the time, they were like $28 for in the money. So I wouldn't be able to buy as much. And then here's the problem I have. Let's say we went from 290 on the SPY to 185. And I bought the 290, right? So this is an example. If I bought those, if I bought the 290 puts, of course the value is going to go up significantly. But the problem is when options get really expensive, the spreads I find get super wide and the liquidity drops out of it. So at that point, not that many people are going to want to buy those. So if we're down at 185 and I'm holding the 290 puts, while there'll be worth something, yes, I'm not going to get as much bang for my buck as I would if I bought the deep out of the money. Because right now, the deep out of the monies are going so cheap. My average, I think, is $1.60 on 420. I'm in 420 of those right now. So there is a bit more meat on the bone, in my opinion. And if it does get down there, so let's say we don't get to 185. But if we drop down to, let's say, 250, right? So we go 400 points down from here, those $1.60 options that I have are going to be worth probably about $6 or $7, and I'll already have met my objective there. So that's really what I'm looking for is, and then when all of a sudden it gets close to being, my goal is to get it where at expiration or near expiration, my strike price is around market price, because then those are the ones that are easy to trade. Implied volatility jumps up on those, and I can get rid of them for a lot more. Anyway, there we go. Ideally, after anticipated move, you want your options to be in the money slightly. Yes, that's why this is a flyer. That's why I'm in 420 of them right now. It's obviously a huge position. Luis says that's the beauty of meeting different personalities of different traders. Absolutely. I mean, that's what's helped me through my career is talking to so many different traders, getting some perspectives. And I'll tell you, there's some traders I look at. I don't really like the way they trade or what they do, but I still learn from them. All right, just not my style. What else do I got? Second quarter earnings shock. I think that might be the one who came in earlier. Yes. Thanks, Tom. You're ahead of me. I was just trying to scroll through and find that one. Second quarter earnings shock already baked in along with expectations for Q3 and Q4, right? I don't think so. I mean, I think that the anticipation is, but I think that the earnings came out a little bit worse for a lot of these companies than anticipated. So unless we got really drastic revisions, the market hasn't priced the extent to which it's going to get priced down. So I think that what will happen on Q2 earnings is companies will post very bad earnings, but they'll probably say we're seeing things start to stabilize and potentially get back to normal. Maybe. Okay, again, that all depends on when we can get out and get back to our normal lives with this whole quarantine thing. So yeah, that was the question I was looking for. Thank you. Let's see. More in the money options. You're killing me, Dave. I do not think I could take on the Fed. Ugh. And funny, usually the Fed is on my side. Usually I'm using the Fed on my side, but I see a situation much akin to 2000 and very similar to what we saw in 2008 with regards to market declines here. It's that bull trap. It's that first huge bounce up in the market after a significant decline where everyone's like, hallelujah, we're saved. Happened in the Great Depression as well. Boom, and then it rallied back up. People thought this is good. Next leg down. I probably should have waited a little bit and waited for that next leg down, but I was worried that I would miss it because we've already bounced significantly off those lows, and I don't want to miss it. So I told you guys the other day, I'm okay to even go negative on this position for a little bit because I have strong convictions, and my thought process and plan tells me we're going to be probably not at 185. I mean, I would love it if we got to 185 on the SPY, but could we easily get to 2,500? Absolutely, no doubt about it. 2,500 would be a walk in the park from here. And if that happens, this trade pans out by a factor probably 4 or 5 to 1, and that's what I'm looking for. Yes. Let's take a peek at this one. I wanted to talk about this yesterday. We've had a lot of people asking about cannabis industry and talking about, is it the turning point? Is this that moment where you buy into the cannabis stocks because weed is going to be great? Well, look, let's look at ACB. I didn't look at the earnings statement itself, but I know that they had a pretty stellar earnings announcement yesterday, and they are rocking to the upside. It's funny because I was gonna take a flyer on ACB as well when they were down in the 50-cent mark. I'm like, no, I don't think I want to. I'm gonna be careful here. Look at the chart here on ACB. You're over 100% in 2 days. Hallelujah, hallelujah. Now, this could have ripple effect, and this goes back, I believe it was Oscar sent in this question a couple days ago about what should he do on his calls, and I said just stick with it because you're down 80%. This is exactly what Oscar wanted. He wanted Aurora to come out with ripping earnings. Why? Because now that could send a signal that the sell-off in the whole industry might be overdone. Now, I'm not a huge fan of ACB right now. I think it's still got some proving to do to get me to buy into it, but look at MJ. Here's your MJ ETF. That popped pretty significantly over the past couple of days. Obviously, Aurora is not the only component of that, but you have a nice move up, erasing 2 days worth of losses and 2 days worth of gains, so it looks positive. You also have some other cannabis companies out there, CGC. When you have Aurora do it that well, it sends ripple effect, and I think Aurora's earnings was really that the little bit of rising tide that kind of floated some of these other books. I didn't look at Tilray. Look at Tilray today. So they also had a little bit of a pop. But yeah, I think that this is a great catalyst for optimism within that whole cannabis space. So for those of you who are looking at it, I think it's a definite positive sign. If you're looking long term, I'd probably say to wait for a breakout above 13. I know it's a long ways away. It's $1 away. We're at $12 right now on MJ. But at least then it'll be breaking those highs, and then you have some uncharted territory above it where you'll be running and looking more towards some higher highs here. There's some unfilled gaps. Like I think there's going to be a strong magnet to the price around 1650 on MJ because you have this unfilled gap window here. Anyway, all right, cool. Thanks for mentioning the Aurora one. What else do I got? You guys got any last minute questions? Yes. Sheena said ACB did a split. Yeah, a lot of them did. ACB did a reverse split. Well, you saw with the USO and UCO both doing reverse splits because they can't remain under a certain price for too long before they get delisted. We're going to get a list of weed stocks. I created one a while back, Daniel. Let's see if I can dig that one up for you, and I'll let you know on Monday if I find it. Remind me, please, because I'll probably forget. I'll try to write it down. List of... All right, I got it written down here, so hopefully I can find that list for you. I put it together a while back. This is about a year and a half, maybe 2 years old, and there may be some new contenders in there, but to give you an idea of the overall list out there. All right, what else you got? I'm looking to buy back into Tilray and the next crash down. Same with the other one or two. Yeah, you know what you could do, Brendan? You could also be out there and saying, hey, let's buy some call options on the industry and set those out for a few months. Obviously, you don't want to be doing 30 days, but what do you go 90 or 120-day call options on things like MJ? Because I think you're still going to have a little bit of a tough time right now, but I do see these stocks going back into some lofty highs and having some nice trend up. When Lambo alt season, well, I'd never buy a Lambo. It's just, even if I had $100 million, I wouldn't be buying. I'm not that type of person. I'm nope, not for me. There's only one. I meant, where can I get a list of weed? You mean the different types of weed, like Northern Lights and Jack Herrera, that type of thing? Just go to your local dispensary. Let's see. If you're starting up a small account, would you do futures on short-term trading? Yes. Hey, Leighton, I answered that one real quick. Look, there's a danger to that, right? So you're saying, if you're starting up with a small account, would you do futures on short-term trading? I would certainly look to using futures. I would certainly stay to the ones that don't move very quickly, and I would stay to the major indexes. I would probably start with Dow futures because it's less points, less money per point. That way you can start to learn slowly but surely. So if you're starting out, education is more important than making money right now, because if you don't, the market will teach you, and that's a much more expensive lesson. So I would say start off slow. The danger here with futures is it's a leveraged instrument. So there's a tendency on everyone's part to make as much money as fast as possible. My concern is, if you're just starting out and you're starting out with futures, you're going to go, oh, look, I'll trade crude oil. Oh, look, I'm going to go trade the Russell. Oh, look, I'm going to trade pork and soybeans and all this stuff, where all of a sudden it's moving so quick, your inexperience is going to actually cost you a lot of money, and that could blow your account. So I'm a little worried about that one. The weed broker. Hey, Lewis, I'm from Northern California, where that was pretty much the rite of passage. I know my weed. Anyway, yeah. So Leighton, I would say start off small, and if you are, really be careful with it, because you got a leveraged instrument there, and that's dangerous, especially if you're inexperienced. It could destroy your account. I've seen more people blow their accounts. The thing that's blown more accounts has been actually triple ETFs. Next would be trading the wrong futures product and not having stop losses. All right, what do we got? I found with the short-term small account, you can do a short-term trade since the risk is too high, the bigger the zone. That's a good point. Kevin, I'll read that one for the podcasters. Kevin, one of our viewers on YouTube, says, I found with a small account, all you can do is short-term trade since the risk is too high, the bigger the zone. Yeah, what he's referencing there is part of the analysis process in your strategy is saying, all right, I'm finding a zone in which I wish to buy. Not a specific price, but there's a zone generally, and there's qualifications to that zone. If you're looking longer term, let's say trades last 2 weeks or a couple of months, those zones could be fairly wide. And given how wide the zone may be, that may not be worth the investment for you, meaning you could lose a lot of money because the zone is so wide. Therefore, it's important that you understand where within that zone you buy, understanding how much that security is moving in a specific moment in time. But it does lend itself to be more of a short-term trading instrument because you can have smaller stop losses for that futures product. So that's a good point, Kevin. All right. Any last-minute questions here? Well, I'm going to wait for you guys to type in some questions. While I do that, let me go into what's cooking for tomorrow. I'll run through your economic calendar for tomorrow, for Monday, and earnings, and start with earnings calendar. Not a lot here. You've got Baidu. For some reason, people love to trade Baidu. They're about to report earnings on Monday, but you see, other than that, we've got Deutsche Börse, C Limited. Other than that, not a lot of interest here. I think Ryanair might be interesting. They're expected to lose $1.29, and I think rightfully so. I mean, obviously airlines have been ground to a halt, but this will be an interesting announcement for Ryanair with regards to their earnings. Economic announcements for Monday. Don't bring us too much. You can see there's not really a lot, nothing going on for the U.S. except the NAHB Housing Market Index, which they're expecting to rise. Other than that, you don't have anything that I would say be a huge one. You have unemployment rate coming out for the British pound, which is very interesting. They're only expecting unemployment to jump from 4 to 4.4%. So clearly not I guess they're just not seeing as much pain as we are. Remember, we jumped to over 16%. We jumped to 14%. They were expecting 16%. UK is at 4.4%. I find that really, really interesting. Anyway, that's the announcements that we have happening for next week. That'll be your Monday announcements. Not a lot of really exciting stuff out there, so mostly it'll be what happened in the after hours or over the weekend session out there. Let's see. Alex says, Merlin, options premiums are now low. Any option recommendation? Selling options is not happening. Yeah, I mean, you probably have to go more directional. right? And that's the thing we talk about with Steve Moses and Tim Blotzer, is really about that timing of markets and saying, okay, if volatility is real low and I'm not getting a lot of premium for being a seller, then I might want to flip over and be directional, especially for those spread traders. You need to go from being a seller to a buyer, and some people aren't good with that. Therefore, you just don't trade until you find that opportunity again. Do you see Thunderbirds? I did. Tom had mentioned that. It's funny. I was sitting here and I knew they were supposed to come over. They actually flew over my place. It felt like 1:45 or something. But yeah, they saw them fly over. The Thunderbirds are doing a route around California right now to salute all the great workers out there putting their lives online and doing some scary stuff for this whole coronavirus in the hospitals, etc. Okay, let's see. What else do I got? Any last ones? What would be a reasonable stop loss for gold in this market? Are you talking about gold futures like GC? Again, I can't answer this question because you're asking me a vague question that's not pointed. And what I mean by that is, if you're saying what would be a reasonable stop loss for gold, what type of trader are you? Right? Are you are you a long-term investor, or are you a day trader? Or are you somebody who's looking to trade over the next, let's say, 2 days to maybe a week? It really depends. I think I saw them fly back to the Huntington Beach party. It was pretty cool. I love the Blue Angels are awesome. Or Thunderbirds, Blue Angels, whichever one they were awesome. So, Gayer, it's really hard for me to make that statement because I need to know more information, right? If you're saying that you're looking to be a position trader and you're looking at buying something that a trade's going to last, a few months, then maybe you're looking at the daily ATR, which is about $30. I give you a $30 stop loss on that. If you're looking at intraday, someone who's making day trades, I jump down to a 5-minute chart, right? And now you're looking at a $1.23 on a 5-minute chart. Okay, so there you go. A $1.23 would probably be a tight one right now. May not seem like a lot, but that's 1.23, not a $1.23, but 1.23 on gold. Depending on your zones, that might be a lot, that might not be enough. So you kind of have to tailor things here. I'll give you an example. I'm just going to really make this one up as I go along here. But let's say, for example, I'm on a 5-minute chart and you thought about buying gold. And you said, all right, I'm going to buy gold if it drops down into this little zone right here. We will draw a little box around it, and you say, okay, we're on snap mode, sorry. All right, let's highlight this bad boy. And let's say you're looking to get it, if it drops back down to that blue zone. Well, that blue zone has a $1.10 stop, right? It's $1.10 range. So if you're looking to buy it as it came in here, and you had $1.23 was your number as kind of being key, and you look at this as $1.10, would $1.20 be a fine stop loss for you? Yes, it would be, right? It would be acceptable on this specific trade because $1.20 would keep you in here. This range is only $1.10. So you're probably going to be fine with that. So each analysis, each situation requires you to look at that moment in time, that exact snapshot, and say, here's how much it normally moves. Here's how much it's moving right now. I base my trade off of right now. But always be thinking about the normal movement. So great question, Gayer. Appreciate that one. Cool. I'm going to do my best to disappoint Big Eb here and keep the show under an hour. I'm at 57 minutes right now, so there you go. I have 2 minutes and 37 seconds to wrap up. 2 minutes and 5 seconds right now to wrap up this show, so that Big Eb doesn't win and get himself a 1 hour show. Anyway, that will do it for today's show, everybody. Thank you guys so much. Again, hopefully you liked it. If you did, you've got some good information. If you like coming here and spending your Fridays with me, cheers to that one. You can help me out by clicking that little like button. Click the thumbs up button. That always helps me out. You can leave comments down below the video. Share this one as well. And then look out tomorrow morning. I'm going to post some interesting charts tomorrow called the Chart of the Week. That will be released at about 10 a.m. Tomorrow. I'll be actually building it today and hopefully getting it all done tonight so I can go and have some fun with some friends and play some trivia tonight. Anyway, hope you all have a fantastic weekend out there. Again, if you have any questions on any topics or something you would like to see, whether that's a topic or a host, you can post it down below the YouTube videos anytime. You can also go to TraderMerlin, which would be a very simple way to do it. You go to TraderMerlin, as many of you have done, and sent in questions that way. You can send them on at TraderMerlin.com. It's easy. Or you can just put them under the YouTube videos or type them in live during chat. Sometimes, as you guys have noticed, I can't see them very well. There is a way you could actually do, I think you can do, there is an enabler here where you can actually click that little dollar sign. It highlights your chats because you paid, and that would make it easier for me to see things. I'm just saying. Anyway, hope you guys have a fantastic weekend out there. Cheers to all of you. Be safe. Have a great weekend. I will see you Monday, my friends.